Hey, it's me, the finance guy. Today we're going to be talking about why is the stock market so high. Subscribe and hit the bell. I make videos almost daily. Oh, such a fine Sarah. Oh, I'm sorry. I didn't see you there. You must be asking yourself, why is the market up? Well, I'll tell you. It's greed. Really, the number one reason why the market is up so high is because people are trying to make more money into more money, which I think every investor should do. But I think also every investor should think, what are they going to do if the market takes a correction? And I want to show you guys today why I think that the market is upside down right now. And I think that it's really high and overvalued. And what makes me think that is something very simple. Map called FinViz. I don't know, maybe you guys have heard it, maybe you haven't. In this case, I wanted to bring to light what I thought was kind of interesting and what my investing style is and why I'm only investing into particular stocks right now when everything is up so high and with incredible evaluations. So let's get started. So this is the broad market of the S&P 500, and this is the PE ratio of a lot of these companies in a full map view. It also has a color scale. That's something that I really like about FinViz. As you can see, lower evaluations are in the green and higher evaluations are in the red. Well, what does this color chart kind of tell you in general when it comes to the stock market? Well, it's rather simple. Right now, the stock market in general is red. It's all red, or the majority of it is. Some of the financials are in fair valuation, but when you look at the tech sector, services, basic materials, healthcare, and industrial goods, a lot of these things are also in the red. Credit services are also in the red. A lot of things are just in the red in general. And when you're doing any kind of investing, you have to think about, are these stocks or are these companies at fair valuations? Are they trading fair to their price to earnings? And right now, well, the stock market is quite high and it could have a correction in the coming years. Some of these companies might become more profitable and we can continue on the bull run. But you also have to be prepared of what would happen in a financial collapse or in a bear market. And you have to have cash available to be able to do that. So I think when things are up, maybe you invest in cash or just start stockpiling cash. And when things start to go down and come down to fair evaluations, maybe you pick up a few more shares. I'm not saying that you need to be fully pulled out of the market. I don't believe in trying to time the market. It's almost impossible. I'm just saying that trying to invest at high evaluations probably isn't the best decision right now. And I think that the market is quite clear when you look at this. This is just a map of how red and how high the PE ratios are. I think the only time in history that the Shiller PE has hit this point is during .com crash and also during the Roaring '20s crash. So with that being said, I want you guys to be prepared, and if you're not, well, I think now's a good time to start stockpiling some cash because then you can get ahead if this does turn south. So, we're on a 9-year bull market. Maybe you stockpile a little bit of cash right now, and we'll see how it goes in the future. So I wanted to go over an area that I think is getting a little bit of suffering right now, and I think could do a really good return over a long period of time. Just when it comes to doing any kind of investing, I like to buy into things when they're usually sold out of or when things are on the low. And I do this because you buy into weakness and sell into strength. And currently, one of the markets that are doing the worst is consumer goods. So I'll talk to you guys a little bit on my thoughts on that. So this is some of the year-to-date performance of some of the stocks or some of the companies that I like to invest in or value invest in right now. Currently, I put some holdings into AT&T. I put some holdings into Kraft Heinz. I put some holdings into Coca-Cola. I put a lot of consumer goods. And as you can see on this whole map, consumer goods right now is probably the heaviest hit sectors. It's not doing very good at all. I think the whole consumer goods market is actually down on a whole by 14%. As you can see, AT&T is also down 16%. Personally, I like to invest into things on the way down and wait for their eventual recovery, or if not, no recovery, and it's just a really bad investment. But I like to dollar cost average down, and it's very hard to find fair valuation on a lot of these companies when the stock market is up so high. And I don't know if you can see, but obviously the consumer goods market is just really suffering right now. It's down, I think, almost 16%. And that's something I think when it comes to doing any kind of investing is buy low, sell high. And I think a lot of people have moved into safer markets just because of how the bond market has come up a little bit, and maybe people are moving a little bit more into bonds and getting out of some of these consumer goods. And I also think that some of these companies are suffering just because we have a lot of people who are looking to be a little bit more healthy when it comes to what they consume. And these snacks and these things have been around for a decent amount of time, and I just don't think that they're going to go away. I just think that they're going to suffer for a little bit. With that being said, these are just kind of areas that I think that have potential really good long-term returns just because they've had such a large dip. And I wanted to tell you guys that I think that cigarette companies really aren't quite dead just yet, and why I think they could potentially be the better investment for a long-term cannabis play. Now, personally, I don't like to smoke anymore. I used to smoke, and I don't like to smoke. Not cannabis, but cigars, and I don't think that smoking in general is good for your health, just like alcohol is, and it's largely considered a sin stock, but it doesn't mean that it could make a good investment for the future, and I'll explain why. Create something called a spliff. If you guys don't know what that is, it's like a cross between cannabis and tobacco. You mix the two together and you create a highly addictive THC-based product. And I'm not saying that this will or will not happen. I'm just saying that what could happen. And when you have tobacco-based companies creating products that are like this, where you get highly addictive, highly maybe high or THC based products, you could end up with a product that would be very well received by a lot of people. Or the adverse side, if they just decided to invest into cannabis in general. These companies have been around for a really long time, and you can bet your butt that they're going to try and finance and purchase some major cannabis plays in the future, that they're not going to try and die out. They know that a lot of companies are really kicking their butt right now when it comes to any kind of smoking in general, because a lot of people are smoking cannabis instead of tobacco because it's the new hotness. And who knows how long it'll be until that finally dies down, but it's a market that's going to be booming and continue to boom until full legalization on the United States. And I think that will happen here in the next 10 to 20 years. So investing into these companies when they're down and maybe suffering right now could be a really advantageous thing in the future if big tobacco decides to purchase some cannabis companies coming up in the future. And I know you might be saying, well, I don't want to support big tobacco, and that's totally fine. You can invest how you like to invest. You can do your own kind of investments and making sure that you don't want to invest into something that you find toxic, and that's totally fine. But I'm just thinking that this is a play and it could happen in the future, and I wanted you guys to be aware of that when you do any kind of investing. Man, it's really weird seeing me in a suit again. Well, anyways, guys, thank you so much for watching. Please subscribe and comment down below. I really look forward to hearing back from you on your thoughts on why you think that the market is up, and I'll see you guys again very soon. Let me inhale the fumes from my wine and choke on my tie. Such is the way of ostentatiousness. Ah, what swinery.